I'm going to go ahead and short the breaker here after the delivery off the high end of the balanced price range as well. Once again, I'm going to go ahead and add one more so I can hold a runner. All right, good evening, everyone. I'm sitting down here to do a full in-depth review. We're going to take a deep dive, and this is going to be Friday the 13th, 2024 of December. All right, so coming into it, we understand it's a Friday, and the fact that it's Friday, right? Usually, whenever we have a classic trending bullish day on Thursday, I'm going to be expecting very, very classically a Friday continuation to the upside. Now, obviously, today we caught 80 handles shorting the marketplace. Okay, so that's obviously going against what I typically like to do on Fridays off that classic continuation in tune with that weekly profile, but today it was different, and I'm going to tell you why. Coming into it, we obviously have a pretty back and forth Thursday, right? And then we'd have this huge gap up opening here, kind of set the stage, and then London keeps going, and then ultimately we enter 9:30 a.m. and prices soars above all-time high / buy side liquidity. Now, what's key here is the fact that it's Friday, and all we've been doing is slam into the upside, and then coming right into the opening, we offer a price right above that opening, and that's what makes it so key. The fact that we're trading above that opening initially, and at the same time clearing that buy side liquidity, there's two things I know that are taking place here. I'm going to view this as a Judas swing to the upside, which is going to lull traders in to longing because they just think this thing's going to just keep ripping higher because everything's just been bullish. And whenever I see it trade above the 9:30 opening like that, that's inducement of longs. Okay, and this is going to be used as accumulation to then send this thing lower. So we have manipulation above the opening price here, clearing buy side liquidity here, and then if we actually flip to ES, another contributing factor to know that smart money is accumulating at those highs, we actually have an SMT divergence. So if you take a look here, ES was nowhere even near that Wednesday high that NASDAQ was able to sweep out. So coupled with that classic 9:30 Judas swing, we also have that SMT divergence. Now, with that said, let's go ahead and drop down to the 15-minute chart. And as you can see here, I have that 9:30 opening annotated here. Okay, you take a look. As soon as we open, minimum drawdown below that, it just slams straight to the upside, right? And once it does that, we look for very specific signatures to actually look to short into what? What are our targets? Well, if you take a look here, what's going to be below here? Above the swing, though, there's going to be sell side liquidity for those who are trailing their stops up from who has already been longing, or people that are just longing once this low was created and jamming their stop loss below this low. So already an enormous pool of sell side liquidity resting below here. And then we have these lows rested from the London session. Okay. And then below that, we still have this huge unfulfilled new day opening gap. Okay, so this is going to act like that magnet on price below all the jam sell stops, below all these swing lows here. Okay, so moving down to the 5-minute chart, which is really just going to be the good stuff. Okay, looking at it once again, here's our classic Judas swing above that 9:30 opening price, right? If we're looking for shorts, optimally, we're going to be shorting above that 9:30 opening and aiming for a discount. What's discount? Well, we take yesterday's previous daily low, we take the high, right? So really anything inside of the premium in this range is going to be that optimal short, and then you're going to want it covered in the discount. Taking a look here, what you're going to find out is here's this initial 5-minute fair value gap here. All right, that obviously took us up into the ultimate all-time high. From there, we create a swing high here, and then we displace down here. This sets the stage for what is so significant for me was showing you guys the setup. We displace down through, initially offering sell side through this singular fair value gap right here, and then we slam to the upside. So now what's taking place here is we're offering both sell side and buy side of the curve through this fair value gap, and then we leave it right here, and that is exactly what makes it a balanced price range because both sell side and buy side were delivered efficiently through this range. Now, once we leave that, there's another thing taking place here. Okay, coupled with the SMT divergence with ES, and ES actually leading the way to the downside here, so it's already down here when we're looking at price here on the NASDAQ. So we had relative weakness being shown on ES, right? And at the time of that happening, we now have, after this balanced price range was formed, we have a change of the state delivery below this up candle here. Now, why is this change of the state delivery so significant? Well, because we have so many targets to the downside here. This little trend line stacked up from the London session. Okay, take a look. All these lows right here stacking up. Okay, and then new day opening gap. And we're above the 9:30 opening. Okay, and that's exactly where you're going to look to short. Below this low here, what is this? This is time-based sell-side liquidity. Why is it time-based sell-side liquidity? Because it was generated just around that 9:30 opening. Now, coupled with everything else here that I'm showing you target-wise, we're going to go ahead and flip to the regular trading hour gap here, and you're going to find out we have a very large regular trading hour gap to be filled in. You can see that we almost had a complete fill of that, right? So by default, these regular trading hour gaps, similar to how we view new week opening gaps, fair value gaps, right? These things are drawn down into like a magnet. So coupled with all the other targets, we have this as well, which adds the conviction. Okay. So with that said, once we create this change in state delivery, you see price now rallies up into that up candle and the low end of the balanced price range. So we're going to be expecting extreme sensitivity in a bearish sell program, right? In a bearish sell program, all up candles should be treated as resistance. Did that hold true here today? Absolutely. What happens? Up candle, trades up into it, respects it, trades off. Up candle, trades up into that. Accumulation of short positions, trades away. Once again, so on and so forth, drops down. And then we enter this consolidation, which leads into model number 3, which I'm going to get to within the next 10 minutes here. Okay, so down to the 1 minute chart. All right, as you can see here, incorporating time into this thing here with everything else shown. We're smack dab in the middle of that New York session kill zone. Okay, so all the optimal trades that we're going to be taking is inside of this kill zone. You know, not outside of it, not before it, inside of this kill zone. That's where the majority of the best moves take place. With that said, as you take a look here, once we wrap up in all-time highs above that 930 opening, okay, we now create a fractal intermittent term high here. So we have a swing high here created, swing high that's lower than this one to the left, and a lower swing high to the right. That's an intermittent term high, and then we displace away. We create that balanced price range, displace down through it. Now, what is taking place here? We have a classic optimal fractal setup taking place with all the higher time frame sentiment. If you take a look here, you're going to find out that this rally up here pierces this short-term high for anyone that's already been selling. Okay? And then from that short-term stop trade, what takes place? Well, the buyers are closing within the balanced price range, and then we displace down below the low end here, drive up into several levels here, which is this fair value gap right here, as you can see, this inversion fair value gap, and the low end of the balanced price range. So this is going to be a severe sensitive point, which is why I was so convicted in taking this short here, and then ultimately leading into 80 handles. Okay, we take a look. All right, what once was a bull shorter block, we completely closed down through that. That becomes a breaker, trades back up into the height of it, right? You're going to anticipate the active resistance coupled with the balanced price range. That's where you short, and then you target time-based liquidity, 930 opening, and then down below into the regular trading hour gap / nudie opening gap. Okay, now let's say that you missed this opportunity right here, right? It actually offered a second one. So this is actually a very, very clean and favorable marketplace that was very giving. So if you missed the entry right here, well, guess what? It displaces here. Does it reach any of the, high probability targets to the downside? No. It just simply displaces one more time. Oh, back right into that breaker. Plus fair value gap, you can short right there. And then off to the races we go. Okay, and it actually even offered another opportunity right here. Look, creates another fair value gap out of this consolidation. Still hasn't reached the low, nudie opening gap, or regular trading hour gap, right? And institutional order flows is fair value gap. So it actually offered 3 opportunities. This is a very giving marketplace here, and you can't expect that all the time. So when it's here, we capitalize on it, make our money. And this is going to lead me into, if we actually didn't catch this setup as a whole, let's say we missed the entire short setup. A model that I teach day in and day out and trade it day in and day out actually performs heading into this PM session kill zone. So we're going to go ahead and we're going to go to the right side of the chart here. And as you can see, those of you who've been following me for a while, you should already know what we're looking at here. Okay, we have a consolidation here. This is accumulation of long orders to distribute them above to those who have been shorting, right? We have a huge drop down to all the higher time frame key levels. That's the first thing we look for with model number 3. Working up off of a higher time frame key level. What is that key level? Well, this dashed line here annotates midpoint of that nudie opening gap. So we're delivering nudie opening gap. All the internal stops here from London session has been rated down below. Boom. And then we return back below midnight opening. That is very, very key, because once we trade down below midnight opening, that is going to yield the most optimal model number 3 that you will ever find. Below that midnight opening, after a large move is already ensued. So what's taking place here? We're going to be attacking those rather than trying to chase the move. We utilize model number 3 to attack those who have been making money. Who has been making money the entire New York session heading into the PM here? Obviously short sellers. And where's our trailed stops going to be? Right above this high right here. Okay, so what we're doing here is we're watching this consolidation, and then we're looking for the model to actually perform. Well, if you take a look here, factoring in time first, okay, which I always tell you guys with model number 3, take a look here. We consolidate through lunch, which is very, very classic of price, which we usually don't try to touch this time zone, right? We actually head into 1250 to 110, heading into that PM session kill zone. We enter this macro here, and this sets the stage for the move. What do I mean by that? Well, if you take a look here, price trades down, breaks a short-term swing low here, so clear short-term sell side liquidity, and then we create displacement. This is a market structure break. Why? Take a look here. Price rallies up, creates a swing high, higher swing high to the left, higher swing high to the right. This is an intermittent term high formed. We drop down and then break that intermittent term high. So that's bearish market structure being upset, and we're now displacing to the upside. Okay, now what you want to find here is utilize the PDA raise to find a clear, obvious entry, and that doesn't perform until here. So we have the market structure break. What is off the catalyst of? We're delivering into that higher time frame key level, right? And it's like, oh, wait a minute, what about these relative lows here? Well, that's why I have SMT annotated here, because we flipped the ES. You're going to find out that ES actually completely dropped down and took out the short-term low here, and even dropped down here again, took out the short-term lows. So it's a SMT divergence forming, which is obviously an added confluence here. So what we're looking at is the macro set the stage for this model number 3. So once we head into 1:30 p.m., which is actually right here, this is where we're actually going to be looking to take our long positions, 1:30 to 3 p.m. That's our kill zone. Well, just so we have it, why would we not be expecting our classic 1:30 p.m. manipulation to the downside to set the stage for a long set? Why would we not be looking for that? Because heading into 1:30 p.m., all there's left for us to do is complete the model, because the market structure already set the stage for that, which I showed you with the SMT, market structure break, macro setting the stage, and then all there's left to do is just find a PDA array to execute on and complete the model, and that happens here. We have a huge influx in price here heading into 1:30. Price drops down. That's going to be your entry point at the survey gap. You're going to want to put your stop down below the slow here, and then simply aim for trail buy side liquidity and even fair value up here at this 9:30 opening. So 2 high probability targets here, engaging with model number 3. Time aligning, everything else explained here. Beautiful model here, beautiful sell-off here as well. Honestly, this is one of the best days. Like seriously, just an amazing day, easy read, and obviously a significant amount of money was made. And that is going to be the conclusion of this entire review here. I certainly hope you guys got something out of this. If you did, please drop a reaction. And other than that, enjoy your weekend, guys.